Have you ever thought about giving money to your kids, the next generation? If so, then you've likely had two follow-up questions as well, and this is where many people get stuck. How much can I give without creating taxes, and when should I start? Getting stuck here leads people to just leave something behind in their estate, which means their kids get the money, but it's after they're gone, which may not be when it's needed the most and may not be efficient from their overall financial life as well. But there's a smarter way to do this. The IRS gives everyone, all of us, a tax-free way to transfer wealth from us to our kids, even our grandkids, right now, when you can actually see it make a difference in their financial life. I've got those annual gift limits and two real-life planning scenarios as to when the best time is to begin a next-generation gifting strategy. Got that and more coming up. If we haven't met before, my name is Mike Bernard. I'm one of the certified financial planners here at Korhorn Financial Group. And guys, this is one of my favorite conversations to have with clients because giving money from one generation to the next, it's more than just a tax strategy. It's about first having the clarity and confidence that you're on track with your financial goals and then being intentional with the wealth that you've built to help the people that you love at a time when it actually can change their lives. Let's start with the rules of how annual gifts and doing a generational giving strategy actually works. The IRS gives every single one of us an allowance every year for a tax-free and estate tax-free and gift tax-free gift. This is called the annual gift tax exclusion. This is the amount that you can give an individual in any given year. No gift tax, no filing requirement, no questions asked, no reporting, that's it. Right now, in 2026, that number is $19,000 per person per year. And there's no limit on the number of recipients, the number of people that you can give that $19,000 to. You have 3 kids, that's $57,000 that you can move from you to the next generation this year completely tax-free. 5 grandkids on top of those few kids, add another $95,000 on top of that. You're moving $152,000 in this hypothetical kind of wild example in a single year without any gift tax consequences. Now you might be thinking, I thought it was $15,000. Yeah. $19,000 this year. It hasn't always been that way. It's been steadily climbing. In 2022, the annual gift tax exclusion was $16,000. Then it went up to $17,000 in 23, $18,000 in 24. Now it's $19,000, been that way in 25 and 26. So a $3,000 jump in just the past few years. It's honestly one of the few areas where inflation adjustments have actually kept pace. The IRS adjusts this number for inflation, and in recent years, that's actually meant something. Now, if you're married, you might know where I'm going, but you can take this even further. Something that's called gift splitting. Gift splitting allows you and your spouse to each give $19,000 per year per person as an annual gift tax exclusion, effectively doubling it to $38,000 per recipient per year. So that married couple now has 3 kids. You're not moving $57,000 tax-free. You're moving $145,000 tax-free in any single year. And if those kids happen to be married, that's $19,000 for you to them, $19,000 for you to their spouse, and from your spouse to them, and your spouse to their spouse. Oh gosh, these numbers can really get big significantly very quickly. This gift tax splitting, this is one of the most underutilized strategies that I see. People hear gift tax and they clam up. They think it's going to be complicated. There's a form to file or there's something that they're going to owe. Instead, for annual exclusion gifts, that's just not the case. You're not paying any estate tax, and in most situations, you're not even filing a gift tax return. It's clean, it's simple, and most people aren't doing it. So that leads us to the real question. Well, if this is something you'd like to do, when should you start? And for that, let's dive into a couple common scenarios. Scenario number 1, you're in your mid-70s, so well into retirement, and your plan is solid. You've got a very clear 5-factor retirement plan, and you're on track. The plan is showing that there's a high likelihood that you're not going to spend all of your money during your lifetime. Well, you know what happens in your mid-70s? That's right, the IRS requires you to start taking required minimum distributions. That's your RMDs from your pre-tax IRA. If you were born in 1960 or later, this kicks in when you reach age 75. But for those of you born before 1960, it's age 73. So that's what it is right now. In this scenario though, your RMD, that's higher than what you actually need to withdraw to live on. So you don't need this extra RMD. You weren't planning on spending it. You don't need it for your lifestyle, but you have to take it. This is a common time where gifting from one generation to the next moves from idea to a reality. Instead of letting those RMD dollars pile up and grow in your taxable estate, you take a portion of that distribution after taxes, after income taxes, not gift or estate taxes, after income taxes, and you gift it to your kids, your grandkids. By doing that, you're doing two things at once. You're reducing your taxable estate and you're moving wealth from you to the next generation at a time when they can actually put those dollars to use. And the best part, you get to see it happen. So I would say this is likely the most common time when a formal giving strategy, generational giving strategy, starts to make sense. The second scenario looks a little different though. You're in your late 50s. You're still working. The kids are in their 20s, maybe mid 20s. They're becoming adults. They're building their careers. Maybe they're getting married and looking for their first house. You have a desire to help them in this critical financial stage to get the right financial head start. And you feel that help would really mean a lot. So here's a question. Do you know where you stand with your financial goals? If you've done the planning, and you know where you stand, you've stress tested your retirement plan and your goals, and you're genuinely in a solid position, then that's a real case to start the gift earlier at this stage, even though you're still in your working career. Here's why this matters so much. A dollar given to a 25-year-old today has 40 years of compounding in front of it. The same dollar received from an estate when you're 55, that's maybe 10 years before retirement. The difference and what that dollar can do, it's not even close. Without knowing and not answering this question, I've seen many families wait. The money doesn't change the trajectory of their lives in the way that it would a 25-year-old, right? If your 25-year-old is saving for a down payment of a house, but you're sitting there financially healthy with excess cash flow and you can move $19,000 a year or $38,000 as a couple to them right now, that's a down payment on that house. That's a head start on a life that they're building. Or what about this? You probably know what I'm going to say. You're in a spot where you can't make a contribution to a Roth IRA anymore. Your income's too large and you have a sizable amount in your pre-tax IRA. So no backdoor Roth either. Giving to your child as they start their career right now, even though you're still in yours, while they start their career, they can use that gift to fund a Roth IRA for themselves. Now that money can grow tax-free for 50 years, even more. These two different scenarios, the different times when you could start generational giving can be very effective. But I want to be super clear that they have one very important thing in common. Both start with knowing where you stand financially first. Without that clarity and confidence, without that strategy, you can't effectively execute. Too often, people begin to give, but they have a nagging concern that they're leaving themselves vulnerable. Even more common, though, is the intention to give, but not doing so because they don't really know where they stand, when in fact, they are far ahead of pace in building up an excess. And that's exactly where all 6 areas of your financial life come into play. Because gifting doesn't live in isolation, it's integrated in all 6 areas of your financial life. Do you have a goal of giving resources to the next generation? And do you have the confidence that you're on track with your plan, combined with the creativity of how to begin that gifting plan? Work with your certified financial planner on that. If you don't have a CFP on your team, you can contact one on my team. Find us online, Korhorn.com. That's Korhorn with a K. WiseMoneyShow.com. You can find us there as well. Or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.